warahmatullahi wabarakatuh. Salam dan bahagia. Here we are from accounting class 4A1. We'll read the conversation on two topics. The first topic is about the balance sheet and the second topic is about profit and loss statement.
Before that, we will introduce ourselves first. My friend
Fina Cholifiana.
And me, Tiara Pratama Putri. Hi, today let's talk about the balance sheet. Are you familiar with what it is and how it works?
Yes, I've heard of it, but I would appreciate a refresh. Could you explain the basic of a balance sheet?
Absolutely. A balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. It presents a summary of the company's assets, liabilities, and shareholders' equity.
So, it's like a financial snapshot that shows what a company owns and owes.
Yes, exactly. On the balance sheets, assets represent what a company owns or controls, such as cash, inventory, accounts receivable, property, and equipment. Liabilities, on the other hand, represent the company's obligations or debts, including accounts payable, loans, and accrued expense.
What about shareholder equity?
Shareholders' equity represents the residual interest in a company's assets after deducting liabilities. It includes the initial investment made by shareholders, retained earnings, profit reinvested in the business, and other equity components.
So, the balance sheet must always be balanced, right? How does that work?
Yes, you're correct. The balance sheet must always follow the fundamental accounting equation. Assets is liabilities plus shareholders' equity. This equation ensures that the balance sheet remains in the balance. The total value of assets on one side should always equal the total value of liabilities plus shareholders' equity on the other side.
That makes sense. Can you walk me through an example of how a balance sheet is structured?
Certainly, let's say we have a fictional company called XYZ Corp. The company contains assets, liabilities, and equity, and so on. All of have their own role but serve its own purpose.
I see the different categories for assets, liability, and shareholder equity. Are there any specific format or convention for presenting the balance sheet?
Yes, there are a few common formats for presenting the balance sheet. The most common one is the report or account format, which lists assets on the left side and liabilities and shareholders' equity on the right side. Another format is the vertical format, where assets, liabilities, and shareholders' equity are present in the single column.
Got it. So the balance sheet provides a snapshot of a company's financial health, showing what it owns, and the shareholder stake in business.
That's correct. The balance sheet is a vital financial statement that helps stakeholders assess a company's liquidity, solvency, and overall financial position. It's often used alongside another financial statements such as the income statement and cash flow statement to gain a comprehensive understanding of a company's performance.
Oh, thank you for explaining the balance sheet to me. It's clear now, and I can see how important it is for evaluating a company's financial health.
You are welcome. I'm glad I could help. If you have any more questions about the balance sheets or any other financial.
Hi, today let's talk about the profit and loss statement. Have you heard of it before?
Yes, I'm familiar with it, but I'd like to learn more about how it works and what information it provides. Could, could you explain?
Sure, the profit and loss statement or income statement is a financial statement that summarizes a company's revenue, expenses, gains, and loss over a specific period of time. It shows whether a company has made a profit or incurred a loss during that period.
So, it's help assess a company's financial performance.
Exactly. The income statement provides valuable insight to a company's ability to generate revenue, control expense, and ultimately determine its profitability. Is often used by investor, ledger, and management to evaluate the company's financial health.
Um, what are the key components of an income statement?
The main component of an income statement include revenues, cost of goods sold, operating expense, non-operating expense or gain, and income tax.
So, how do we determine the net profit or net loss?
To determine the net profit or net loss, we start with the company's total revenue and subtract the cost of goods sold and operating expense. This gives us the operating income or operating profit. We then subtract the non-operating expense and add any non-operating gains. Finally, we subtract the income tax expense to arrive at the net profit or net loss.
I see. So, the net profit or net loss shows whether the company made a profit or incurred a loss after accounting for all the revenues, expense, gains, and taxes.
That's correct. The net profit or net loss is a crucial figure as it shows the company's overall financial performance during the period covered by the income statement.
Are there any specific formats or conventions for presenting the income statement?
Yes, there are a few common formats. The most widely used format is the single step format, where all revenues and gains are listed together and all expense and loss are listed together. Another format is the multi-step format, which presents the income statement with first subtotal and additional details, providing a more comprehensive view of the company performance.
Thank you for explaining the profit and loss statement. It's clear now how it helps assess a company's financial performance.
You're welcome. I'm glad I could help. If you have any more questions about the income statement or any other financial statement, feel free to ask. Thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh. Salam dan bahagia.